Hey everybody, Smart Silver Stacker here. Hope you're doing well. I have got an important heads up for all of you stackers today because it appears that the metals markets are on the brink of a massive and fundamental shift. We now have Goldman Sachs, who is calling for $2,900 plus gold by the end of the year. We've got copper. Copper just had a major breakout. I'll show you what I'm talking about on the copper chart in just a moment. And trust me, this is a big deal because they call copper Dr. Copper. It's a major leading indicator for the economy and for other metals. And we're going to dive into the setups for silver and gold today as well because they are also looking very interesting. And meanwhile, at the LBMA, their silver vaults are being drained to record low levels. Oh, and one more thing, we do have the Brics nations that just added a major player to their ranks. This is a country with a massive economy and the #1 producer of a critical strategic metal. So there's a lot to unpack in this video. Stick around, it's an important one, and let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. Okay, so let's start today off with an examination of this chart of the copper price, which, as I mentioned in the intro, just experienced a significant technical breakout to the upside. Now, we can do a quick recap of the copper price history over the past year or so. Notably, copper rose to over $5 back in May of 2024. That was a nominal record high. It had a fairly steep correction down to under $4. That was in August, but then between August and September, there was a significant rally back up to around $4.70. Since that time, copper has been in a notable downtrend, and that is illustrated by this blue line, this blue trend line right here. But what did copper do yesterday? Well, let's zoom in and you can see that it just kind of blew through the resistance of that downward sloping trend line, suggesting that the bear market in copper may be coming to an end. And you can see that copper has been performing very strongly thus far in 2025, green every single day that it has traded. Now, another very positive signal on this chart is this bullish MACD cross here. You can see the blue line, that's the MACD, is crossing the signal line, and it is all beneath this center line here. And what that's an indication of is that the bearish price action is coming to an end and the bulls are starting to wake up. Now, this would be considered a buy signal by some, but it's one that requires confirmation. But that's exactly what we got yesterday when the copper price sliced right through this downward sloping trend line. Copper is often referred to as Dr. Copper. It's considered a bellwether of the economy, and it's also a leading indicator for other metals, especially silver. That's because copper is an industrial metal, and so is silver. So these metals have a lot in common, and the bull case for both metals is similar. Now, why is copper breaking out? Well, could be some form of optimism surrounding the US economy. It could also be Chinese stimulus. It could be the forecast that copper demand over the coming decades is set to skyrocket for the decarbonization of the electrical grid and also for the build out of all the infrastructure that is going to be required for artificial intelligence and all the computational power that requires. But the chart really says it best that it looks like copper is going to be heading much higher, and it looks like it could be breaking out right now. Now, let's talk about gold because Goldman Sachs has an interesting forecast for gold moving forward. Now, they had originally forecast that gold was going to hit $3,000 in 2025, but they've actually pared that back slightly due to slower monetary easing, meaning less rate cuts from the Federal Reserve. Now, will we get fewer rate cuts from the Federal Reserve? We can take a look at this, the CME FedWatch tool, which shows us that for December of 2025, markets are at this point pricing in probably 1 or 2 cuts. You've got about 12.5% chance of no cuts at all. That's certainly the most hawkish case. Then you've got about 32% chance of 1 25 basis point cut and another 32.4% chance of 2 25 basis point rate cuts this year. Now, I suspect that we may see significantly more stimulus from the Federal Reserve The number one reason why is the ongoing and massive expansion of the U.S. national debt. Eventually, we will reach a point where the Federal Reserve has to put up or shut up, and the U.S. Treasury too, and they're either going to need to default on this debt or they're going to need to print massive amounts of currency in order to pay off all of the debt and devalue the currency. But we're not quite there yet. But that is why I believe that ultimately the Fed is going to be very, very dovish indeed. Will that be this year? Well, markets aren't pricing it in. If it does happen, of course, the metals prices will blow up. But Goldman says that currently opposing forces, that is lower speculative demand and structurally higher central bank buying, have offset each other, which has been keeping gold prices range bound over the past few months. And they speculate that central bank buying is going to remain strong throughout the rest of this year. So you can think the Global South, the Brics nations, they're going to continue accumulating hard assets. And basically central banks around the world are looking to get into gold. And I think that that represents the smart money getting into real tangible assets, considering all of the uncertainty at the moment. But taking a look at the chart of gold here, you can see that it has been quite range bound since the end of last year, but currently it appears to be consolidating within a symmetrical triangle. And if we get a breakout above this line right here, so basically if we get a good close above $2,700 an ounce, which we're getting very close to, that could represent a technical breakout to the upside, similar to what we just got in copper. And gold's chart also has this bullish MACD cross, given the fact that the Global South, central banks around the world are likely to continue buying gold at a fast pace. And any move towards lower interest rates, maybe Donald Trump could do that once he gets inaugurated. We know he's talked about having lower interest rates and controlling some aspects of Fed policy from the presidency. If any of that plays out, that could drive up the speculative demand for gold, and we could see a very strong breakout. I think $2,900 is just a base case. The fact that we did just have copper breakout to the upside, I think, makes it much more likely that we are going to see a similar move in gold very soon. Now, let's take a look at silver, because silver's chart is also very interesting here. You can see that silver has been green every single day thus far of 2025, although, barely so, just kind of eking out a green day today. But the silver spot price is back up over $30. It's got its own bullish MACD cross here on the chart. And silver, like gold, has been consolidating not in a symmetrical triangle, but in a falling wedge. And this is actually a very bullish chart formation. Should we see the silver price get a solid close above $31, we should see much higher prices in the relatively near future. We could even take out the previous high of around $35 in very short order once we get a breakout from this formation. And the likelihood of that occurring, again, I think is significantly higher following copper's breakout. Now, also of interest relating to physical silver, this is from the LBMA and their London Vault data. You can see that their silver inventory levels have fallen to the lowest level on record. So where is all of this silver going? It's not staying in Western vaults. It is flowing eastward. It is flowing to those who are manufacturing solar panels, who are building electrical devices, who are building out infrastructure. In the physical silver market, which is of course not really where the price is currently determined, the price is determined in these derivative paper markets, which are massively expanded on the small supply of physical bullion that underlies them. Hundreds of ounces of paper silver being traded for every single ounce of physical underlying metal. But that pool of physical underlying metal is shrinking. And that means that we could come to a day at some point here, especially if we get some significant price action to the upside, where the physical market in silver is going to become a lot more important than that paper market. And this, of course, as stackers, this is a big reason why we like to get our hands on the actual physical metal rather than just buying an ETF like the SLV. This is certainly a notable development in the silver market, and the strong fundamentals for higher silver prices continue to persist. There's a large annual deficit in the physical silver market. That's also part of why we're seeing existing warehouse levels falling, because they're using more silver in industry than is being mined out of the ground or recycled. So it's got to come from somewhere. And when we look at this silver chart, which suggests that a significant upside breakout may be imminent, combined with diminishing warehouse levels, kind of makes you think, maybe kind of makes you want to stack. Not financial advice, just giving you my thoughts. Now, we've talked about how the Brics nations may be accumulating physical silver. Russia, back in October, told us that their state fund would begin buying silver for the first time in history as possibly even a monetary asset. I talked about this in a video that got quite a few views about how we might be on the verge of the remonetization of silver because of that. And we've also talked about how central banks from the global south are accumulating gold, but there's a very important development which just took place with Indonesia, which, surprise, 3 days ago has joined Brics as a full member. There was talk at the Brics conference back in October of bringing them in as a partner nation, which could work its way towards full Brics membership. But Brazil, just this past Monday, a couple days ago, announced that Indonesia is joining Brics as a full-fledged member. And this is important in the metals market for this reason, that Indonesia is far and away the largest producer of nickel globally. I mean, you add up all of these other top nations and it doesn't even come close to Indonesian nickel production. This is a metal that the United States back in 2021 added to their list of critical minerals. And it's very important for the same reasons that copper is so important right now. The global push to decarbonize the grid and also the build out of infrastructure for significantly increased electrical demand due to artificial intelligence and the large amount of computational power that requires. You need a lot of copper for that, but if you want to build batteries, if you want to do anything on renewables that require large battery banks, nickel is a critical metal for this reason. You might have seen the clip of Elon Musk a couple years ago saying that, we desperately need more nickel to produce all of the batteries that we're going to need for the energy transitions. So this is just another aspect of the Brics nations taking control of the production of critical resources worldwide. And I don't know, it looks like 2025 is shaping up to be a very interesting year for the metals. Leave me a comment down below to let me know what you think. If you want to see more videos about the global metals markets like this one, check out the video that's popping up on your screen right now. I'll catch you next time. Thanks for watching, everybody. Smart Silver Stacker out.